calm your knickers in a knot. Settle down. Calm down, right? Relax. It's okay, right? So, traders, here is the thing about what's happening in the markets right now. I am sensing so much fear in the marketplace. And in fact, I got an email. That title said, "Where are you?" Right? From someone from my list. And basically he said, "Oh my God, the market's going to shit. Help. Calm down, will you? Stop getting your knickers in a knot." For you guys that are trading the markets, if you are getting so emotionally drawn into one day in this overall big chart, you are not made out for trading, period. I'm going to say that again. If you get so emotionally drawn about one day in the markets, or even 1 week in the markets, you are not emotionally fit to do well as a trader, because the number one characteristics of a successful trader is emotionally calm. I've made a lot of money in my trading career, and as people know who are part of what's called my 1% group, who are with me every day, that's that link in the description there. I tell them this, or should I say, they see this. If I have a losing trade, I'm the same. If I have a really successful profitable trade, I'm the same. So there's a lot of volatility that's happening right now. And when it comes to even silver and gold and the mining sector and everything that's going on right now, there's a lot of volatility happening, right? So NASDAQ here, right? QQQ, down day. And we actually got a bit of a volume increase happening today as well too. So, bit of a bloodbath in the markets today, or a bit of a down day today. And guess what? We could just now be getting started for a correction, short term. But then let the end of the year rally begin. So I'm going to say that again. Yes, this could be the start of a bit of correction. Here we go, right? There's QQQ, and here's the SPY. So looking at the SPY, looking at it here, we could be now starting to get what's called an 8 to 10% correction there, and we could be going down to right about there, or maybe even a bit lower, right? I would have to say sort of maximum level would be around about that level through there. That's what I see, around about that level there. That'll be a maximum level if we did start the correction, but it's just a correction. Calm down. Stop getting your knickers in a knot. You're missing out on some really good opportunities, right? So, firstly, if we do start to see a correction, which is actually looking at here, it looks like we may be getting ready for that, because we have been going up for quite some time without any big pullbacks. And it's so interesting. Once again, one small down day, and I'm getting emails. "Oh my God, John, the market's going to shit. Help." One down day, guys. Relax. Stay emotionally calm. Now, I guarantee you, most of you traders are looking at the market like this here. You're zoomed right in. You're looking at the small candle here. You're zoomed in too much. Stop looking at the market too much. And in fact, if you are emotionally about your trading, the number one thing you can do is bring back your charts to this level here. What is this? See how now I'm only looking at bars, right? This is black bars here. It's not red candle, bad. Oh my goodness, crash. Green candle, good. Oh my goodness, here we go to the moon. And I know I can hear the emotions, right? It's like the emotions. Green candle, yes, to the moon, to the moon. One down candle. Oh, that's it. The market's going to shit. Help. What's going on? Relax, right? So yes, bloodbath in the markets today. Actually, a lot of selling today. Tesla got hit quite hard. A lot of stocks got hit quite hard. A lot of things got hit quite hard today. And so this actually could be the start of that correction, that good correction that we haven't actually seen all year apart from what happened at the start of the year. Maybe, right? If it does start that correct, if it does, and we start to continue down, say, past this 660 level through there, then we're probably going to come down towards that level, around about that level from there. That'll be sort of the maximum that I sort of see. I say here maximum because it may not get that far. But if it does, then I'm seeing a very strong end of year rally. Now, let me explain something to you here. Ladies and gentlemen, boys and girls, class in session. In every single bull market, we do end up getting what? We get this drop here. That there was a 10% drop. That there's also almost another 10% drop. And we do end up getting these big drops here. Bull market, drops, drops, drops. Good correction, good correction, good correction, good correction. Right? Good correction. So, yes, the market right now is on titty-totty, right? And it does look like we could be going through a bit of a correction here. But a correction doesn't mean bull market over. It just means a correction. Just like here, right? Just like these, look at these swings here. Up and down and up and down, up and down. Oh my God, John, the market's going to shit, help. Settle down, will you? Just get your knickers out of a knot. Right, so now we actually go down day. If we do start to break past 60, if we do have a bit more follow through, this could be now getting ready for more downside to come. A lot more downside to come. Now, looking at gold and silver here, okay? Looking at gold and silver. This is the gold and silver price. Look at silver right now. Silver has done what? Let me bring on the candlesticks for you. Silver has actually almost retraced 100% almost of yesterday's candle. Why am I saying this? Because when the market goes through these phases, what's called now a time phase or a sort of a refueling phase, sometimes these phases can be really volatile, especially silver. So there's a lot of emotions right now with silver, right? No, silver's not going to go down. Oh my goodness, silver went down. Oh yes, silver went up. It's like, no, relax, get your knickers down. Like, stop, right? Stop. Because right now, there's going to be a lot more volatility happening with silver. All right, same for gold as well too, right? Look at gold. Gold's been struggling now. It's been slowly going up. We're probably going to be going through another one of these phases. See these phases here? See when the market is very, very, very volatile through here? We're not going up. We're not going down. We're doing that. Guess what is probably going to come now? The same thing. We're in one of these what's called time phases. We're now in a time phase through here. This is where most traders get chewed up in the markets there, right? We get completely chewed up from here, right? And this is where like the mindset of a successful trader, that's where my new book I'm giving away for free, that's the first thing in the description. You can get access to that. Or if you really sort of are struggling this year and you really want some more actual coaching and guidance every day the market's open for an hour, then you might be good for my 1% group. So if you're interested in joining that for a whole 1 year, where I'm with you and coach you and guiding you, if you are struggling this year and you really want to get sort of this handled, then there's that third link in the description. You can click on that and go apply for that, and I'll personally speak to you. Looking at the markets though, is that when we're seeing this level here, is that we can see what's going on here. So this is the same thing for all markets, even the GDX, right? These markets are now what's called a time phase, right? And so many traders get so drawn into one leg, right? Oh yes, it's going up. Oh no, it's going down. Oh no. Remove your emotions. See your emotions through there? Do you know what this is what the market does? It gets you so emotionally that you do some really, really stupid things in the markets. Like, AKA, I guarantee you, I know a lot of traders down the bottom here, right here. Guess what? I can't handle it anymore. I'm getting out. That's it. The market's crashing. Get out. And then whooshka, 4 months later. See what I'm saying here? So the market is in an emotional game right now. And it's an emotional game in total. And if you cannot keep your emotions under control as this market's going up and down, then you are not fit for trading the markets. If you're getting emotional about, oh my goodness, I made a big profit. Oh my goodness, lost. All that emotional swings in the markets, it's not going to help you. Because then that's when FOMO comes in. That's when revenge trades comes back in. That's when, oh my goodness, the market's dropping. Instead of looking at it from a logical point of view and stepping back saying, stop thinking about your trading account and think about the actual markets and relax. Because if this is a bit of a drop in the markets, that's all it's probably likely to be. It's just a bit of a correction. That's all it is. And then away we go again. But then guess what's going to happen? People are going to freak out, sell. They're going to go short. They're going to buy put options here. And then they're going to get their face off. Because they think, oh my goodness, the market's crashing. We're in a very big bull market. How do we know that? Bring up a weekly chart. This here is a weekly chart. What do we have here? a very strong move to the upside. So even if we got something like that over the next couple of weeks, what's the trend? Up. What does that mean? If we did come down to here, away and away and away we go. So traders, check this out. I've been looking at this this Dow Jones chart. You can see this actually the Dow Jones chart. I can go all the way back to the 1950s and check this out here. We actually had a very big strong bull market through here, but look at this here. Oh, look at this. We're talking about like 2 decades of a bear market through here. Look at this, from 1960s to 1968. I've also been looking at the fear and greed index as well too. I've also been looking at the stock market itself from the Nasdaq and the E-mini perspective, and specifically I've been focusing on the S&P 500, and I've been doing some analysis looking at extensions, Fibonacci retracements, and so much more. And just by doing some simple analysis, we actually have a target up here of 7,500. We actually could be getting ready for a face ripper rally, and that's exactly what I want to share with you in today's video. So that's exactly what I want to share with you. So here's the big thing that I want to see with you here. One of the big things I'm noticing right now is what is the big thing that's happening right now across a lot of people, and it's I'm seeing a common theme around all these markets for me, right? And if you've been around the markets for a few years or more, then you would know what I'm talking about, right? The thing is this: we're starting to see the recession word, aren't we? Everyone's like recession, recession, recession. But what happens when most people are saying the same thing? The opposite happens in markets, right? We just know that. Because the exact same tonality, the exact same things, the exact same headlines, the exact same... There's always something to be fearful about, right? So I'm actually, firstly, I had a 7,000 target on the S&P 500 by the end of this year. I'm actually raising it to 7,500. Why? Because it's just extensions. I'm going to go with the extension number. But check down here. Right down here was what? Right down here was when so many people were saying recession. So, and it's the exact same feeling and the exact same thing. I'm like, hang on a minute. There's a lot of bad news, so-called bad news. There's always a lot of bad news in the markets, right? There's always wars. There's always inflation. There's always Trump. There's always, tariffs. There's always something. But how come the market just keeps going up? But this time's different, right? And then the market makes the new high. It's like, hang on a minute, what's going on, right? And the purpose of me saying this, guys, is that please don't shut yourself off to what could be one of the greatest rallies we're going to see in a very long time. Because if this is going to be the final rally before we go into recession, and yes, we are headed into a recession, but the final blow-off move before the recession starts, we could be getting ready for that. And it's on the books here right now, and we're getting the exact same analysis here from a swing up, swing down, retracement, swing up, swing down, retracement, and so on and so forth. And the big thing I'm actually looking at this from, I'm always looking at this from a perspective of looking at the overall big market view, right? Because it's always... We always get sometimes trapped into this here. Right? A lot of people get trapped into, and I used to as well too, all they'll focus on is like, oh my goodness, John, look at this down move from here and so on and so forth, right? Oh, by the way, guys, bit of a quick short little tip for you guys, right? Lower highs are downward trends, right? What happens if we come down, make a higher low and then break up? That's now what? Establishing a new upward trend, right? Because lower highs are downward trend. If we rally up, come down, form a higher low, and then we start to break above here, if we start to get this scenario, guess what? The buyers are coming back in. There's a new trend, new upward trend being established. And if we get that, we're probably going to be breaking this downward phase through here. Let me do that again for you, right? This whole downward phase from here, we're probably going to hold, break up, break above this level 3. If we get something like that, guys, get ready for a face ripper rally. Now, again, yes, I do believe there's a recession coming. I do believe there's something be coming down the road. But in the mix of all that, remember, the market can do the exact opposite of what you think it can do. And one thing I've noticed time and time again is this. Check this out. Through here, we're getting the exact same situation from here. So I'm looking at the Dow Jones chart here, and I'm looking at the longer term picture here. I'm looking at all these. We had a big move up, and look at this here, very big move up. 19 there, big spike, big crash. Then look at this bull market, right? Look how big this bull market was, right? We're talking about we went into a very big bear market, right? Oh, by the way, guys, check this out. This is where I love this stuff, right? Look at this here. So whenever we're making higher lows, look at this here. Low, higher low, higher low, higher low, slight lower low, higher low. Whenever we make higher lows, we're in an upward trend. And look at this here. As soon as we started the switch, this is a monthly chart, by the way. Lower high, lower high. So this here is just, it's amazing. Anyway, so we can see, look at a very big secular bull market, but I'm focusing more on now on what I'm looking at here when it comes to these markets from here, right? So I'm focusing more on this here, right? Check out. Look at that. This from the bottom low from the 2008 financial crisis, low point from there. We got this low point from here, bam, right there, bam, bam, and right there as well too. And right here, guess what right here is at? Right here is where, what's happening right now? This is right now. Obviously, looking at the Dow Jones, looking at the big monthly charts, and we've probably got a whole bunch of support coming through here as well too. We're making significant lows, high lows, high lows, high lows. Yes, there's a recession coming. We know that, right? But is the recession going to be next year? Is it going to be 2 years from now? Don't rule out that this is just a short-term shake and bake and we're going to get ready for a face ripper rally and miss out on some amazing opportunities. So I don't want you to be like, nah, that's definitely not going to happen, John. You're an idiot and so on and so forth. No. Hey, don't shoot the messenger. I'm just sharing with you what I'm seeing right now, right? Because there could be so many amazing opportunities. Now, by the way, guys, there's so many opportunities on the bullish or bearish right now. Right? If the stock market does go up or gold continues to go up, and maybe the oil and energy sector goes down, whatever, right? There's amazing opportunities all over the place, right? If you don't know what you're actually looking for, then you need to know what you're looking for, right? First link in the description there, guys. I've actually got a presentation, a video that I've just recorded, sharing with you all the details to my trading system, my trading setup, so you can learn that. So if I'm going back to this level here now, and I'm going back to the S&P 500. Now check this out. This is where it gets so awesome, right? Using simple Fibonacci extensions, right? Fibonacci extensions here. Check this out. This is where it gets like, I'm telling you right now, guys, we could be getting ready for a face ripper rally to the upside. And oh my goodness, I am so excited. There's going to be so many amazing opportunities just underneath our feet. One, just stay flexible, right? Yes, this may not happen. We could go down. Who cares? We could get ready, but I believe we could be getting ready for a big face ripper rally, and let me show you the reason why. We've had a very big move from here to here, but check this out. This is how cool this is, right? We go Fibonacci retracement. If we go from low to high, look where we actually found support, right here. Look at this here. Absolutely amazing, right? Came down right to the 50% level, which was this low to high, bam, bam, and then look at that. We had a very big move. Now, where do we have what move do we have? There's the Fibonacci retracement. Now let's go to the extension, which is we break it from the low, we go from the high, bam, and then we actually bring this down now to the low point, and look where it actually got to. See this here? So I measured it from the low point, the high point, to low point, and you cannot believe this, right? This is just pretty magical. Oh my goodness, check this out, right? Where'd you go? From here. Right, there. Look at this, right? Now we're going to bring this over to here. Let's check this out. So low to high, then we came down. That was 50% retracement. Look where it actually came to. It came right to what? Smack on 1-to-1. You cannot make that up, right? That is absolutely just beautiful. And again, I'm measuring from this low here to this low here. So as you can see from there. So what I did do is just recently, just to find out what's going on right now, is I did the exact same thing in the markets. And check this out. This is where it gets so cool. Right? This is from low to high. Look where we're at right now. Look, right at that 50% retracement level, right? Right at that level there, 50% retracement and a long-term trend line coming up. So if the exact same thing happens, which we can, right, in this very big bull market, now remember, if I bring this over here, remember, this from low to high, that was the 50% retracement. The 1-to-1 extension was up there, right? Remember that? Now we got what? Low to high, come down, 50% retracement. This here is the exact same thing over here. Now, by the way, the herd mentality is doing the exact same thing here too. Recession, crash, oh my goodness. We also have the fear and greed index. Oh my goodness, so much fear. Get ready for a slingshot, right? Face ripper rally, here we go, right? So now check this out. This is where it gets so awesome. So I'm doing that through here, and how I got this 70, I've actually got a 7,000 target. I was being conservative. I actually should raise it to 7,500 now. Why? Using simple extensions is that if we continue this overall big bull market, because we are still in a very big bull market from here, right? If we go to the extensions, and we go from low to high, bum, and then we actually bring this extension to the downside, which as you can see, what I'm doing is I'm just measuring. I'm measuring this bit through here, as you can see, right? So that's that low bit from there. Let me just make sure it's on there. Right? And then if I squeeze this up, look where it actually gets down to. this whole 1-to-1 extension, this O&D target that I have here, it's just a short abbreviation for what I'm looking at here, the O&D target. It's like this is what we could be getting ready for, guys, right? And so anything can happen. So just keep an eye out for this here, guys. This here tells me, and I'm just looking at this overall market. I'm looking at the sentiment right now. So much fear, and crashes don't happen when most people are fearful. When everyone's saying that there's a recession coming, and oh my goodness, this is so bad, and people are worried, the market tends to rally. The market tends to rally.